combination of both, where you build models and you trade them, right? So kind of that's the unique proposition, or one of the main differences in our services. Disclosures are important. Please read them. Trading stock and options involves risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current conditions. Oh, Keith is here. Keith, I can make you a panelist as well, in case you want to jump in. Welcome, Keith. Disclosures are important. Trading stock and options involve be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance for general education information purposes only. It's very important to have a trading plan, written down rules. Again, process is very important, more than outcome, right? And it's in any industry, right? And now I'm doing some with companies, similar companies, and the managing IT department, right? I do it for Tradespoon, for Yellow Tunnel, and it's the same thing, right? Sometimes you just want to have a fix, right? And you want to update your production environment, right? You have users, right? Yellow Tunnel, Tradespoon users. There's a new features, and we just, all we want to do is release a feature, so the users have it as soon as possible, right? That's the mindset. But sometimes, if it's done at the expense of the process, where maybe you bypassing quality control, or maybe you haven't looked at all the configurations, or maybe you haven't had all the proper meetings where you got everybody on the same page. So you always have that decision, process versus outcome, right? And in trading or building technology, or any other business, process is the most important, right? If you start shortcutting the process to improve or speed up the outcome, it might work for a certain period of time, but at some point you will pay the price, right? It could be tomorrow, it could be a year from now, but at some point it's not a sustainable model. So process is more important than the outcome. What does the process mean in trading? You have your routine. We meet pre-market. You look at the futures data. You look at the Tesla earnings. You look at the Google earnings, Texas Instruments. You look at the flash PMI data. You look at all of the important data, right? And you make a decision whether the pre-market futures are up or down. Then you do some push-ups, right? You do some breathing exercises, you get in the right mindset. And then you review your trading plan, right? Main components of your trading plan: cash, right? I propose 30% of your portfolio in cash. Portfolio drawdown, right? Number of position size. Are you going to be long volatility or short volatility, right? Is the VIX going to expand and the market is going to continue to pull back? Well, maybe then you'll use, your long volatility. If you think this is just a consolidation and VIX is going to, drop to 12, well, then maybe it makes sense to be short the volatility, right? And then you can look at, if you want to be long calls, and then you want high probability of success, high return on capital, right? If you long volatility and you buy out of the money calls, then this is a high return on capital, right? What do you call it? 10 baggers, 20 baggers, right? You invest 10 cents to make $1, right? So that's great. It's a high return on capital, low probability of success, right? If you think volatility is going to collapse, right? We went from 6 to 16 and we dropped to 14. We're going to do high probability of success, where you selling your premium, selling short puts, selling call spreads, selling put spreads. And you have maybe high probability of success, but low return on capital, right? So those are the decisions you make. And then when you start placing trades, before you do that, you have your pre-market, you have your journal, right? I encourage you to keep a journal and document every single trade. That's very important. And in the trade, you basically write down, in the journal, you have a pre-trading routine, right? 4 positions, 2.5% account value, wait for 2 to 3 days to confirm the trend change, right? It looks like market is consolidating and probably the top is set. If I have to guess, short term, the top is set. And then the question is, how deep is this consolidation? Is this 2% pullback, 5%, 10%? Well, that will depend on a few variables, right? Earnings, right, et cetera, et cetera. So 2.5% account value trades, that's the hardest part to deal with, because just the way we wired, right? This is more of a trading psychology. Prospect theory, right? When you have, I propose to risk only 2.5% of your portfolio. Average account is $10,000, so $250. But the $250 of Fred is completely different, right? Because we have different background, different history, different goals, right? Different childhood, right? All of that will influence your relationship with $250, right? And then when you confront it with either $250 gain or $250 loss, usually we all make different decisions, especially in the beginning, right? When you confront it with $250 gain, you're very happy. You can go get a nice cup of coffee. So you close your trade, right? But when you confront it with $250 loss, you don't close the trade. You usually think that I got this, right? I know how the system works, and I'm going to wait until the market reverses, right? Right now we are at 548. Usually 548 holds. I'm down $250. What do I do, right? Right. You hope that it will come back to 560, right? Especially in the beginning. But then it drops to 540, and then now instead of $250 loss, you have $500 loss, right? So prospect theory is the most important. You want to document this, and first step is to be aware of it, right? To say that yes, I also have certain biases. The first step is to admit that this is an issue, and then you work on it, right? Just like anything else, right? If you play too much chess or you have too much wine at night, the process is the same. So in terms of stock forecast toolbox, support and resistance for the market open is Model C is 552 support, 557 overhead resistance neutral. For the next 10 days, it sees that we could drop to 547, 545, not lower, but still neutral trend, right? We're trading between 560, 545. There are several events that can influence that range. One is the earnings, Tesla, Visa, Google, Texas Instrument, right? The UPS, etc. And the other one is macroeconomic data, right? The headline news today that Fed is already too late, right? I open up my Twitter. I subscribe to a bunch of gurus and a bunch of economists and technicians, and the conversation is today, because the market is pulling back, right? Self-serving bias, right? Try to rationale is that Fed is already too late, right? They should cut rates in July, and they're not going to cut rate in July. They're going to do it in September. It's too late. The recession is coming, right? Same conversation we had in the past 2 years. So whether it's FOMC decision next week or today, we have flash PMI, manufacturing PMI, right? So if it's very low, if it's all of a sudden from 55, it drops to 49 or 48, well, that confirms to recession bias. If it stays at 55, goes to 54, 56, well, then it means that soft landing and the market is oversold. Let's start buying, right? So those are macroeconomic data, and earnings will influence trading decisions. So I would personally, watch on spiders, very important level, right? We talked about this line kind of in a sense, you need to stay, right? So 548. In terms of next level is 540. So if we don't, if the pullback accelerates, right, because the earnings are not as good as everybody anticipated, then the next level is 540. We don't really have much support before that, but let's confirm that with the data of how dealers are positioned, right? How are the dealers positioned? Any questions so far? Desi, can you go over? Good morning, Fred. How are you? All right, so let's see how the dealers are positioned. Are dealers long gamma or dealers short gamma, right? Because it doesn't matter what I think, but it does matter what how dealers are positioned, right? Whether it's futures data or options data, or hedge funds data. How Warren Buffett position in Bank of America is important, right? Because he can ultimately influence the move of Bank of America. So it is important to think about what other people think, right? Game theory. right? Which is a very important part of trading psychology. All right, so let's take a look at the gamma exposure for dealers. Pretty popular topic among the traders, option traders, and Keith, this is his main tool. And breathes by gamma exposure. All right, so on spiders, gammas, the dealers are long gamma, right? They're long gamma. So, and then in terms of this Friday, July 24th, and then going into the August expiration, you can see next level is 545. So model is pretty good about saying that 545 is your first level of defense for Friday. 20,000, I mean, pretty decent volume, but not a lot. So, and the next level is actually 530, right? So if the 545 or 540 doesn't hold, then I think 530 bulls will step in, right? And that confirms to 50-day moving average, right? So model, in terms of positioning, we don't really have much positioning at 549, 548. So I would watch that level. If we break through Friday's low, the next level is 540, which is important. And we may or may not hold based on earnings and Powell's decision. If we don't hold it, then a lot of people will step in at 530. So I personally think that the core scenario that we drop either to 540 or 530, and that's where we're going to find buyers stepping in. Meanwhile, in terms of earnings, Tesla is down 10%, Texas Instruments is flat, and Google is down 5% after the earnings. So you have Nvidia pulling on. Spiders are down 1%. QQQ is down 1.5%, and QQQ is below Friday's low, right? So QQQ opened below Friday's low. It's opening below the July 12th, the gap, right? June 12th, the gap, the CPI print. So basically, mega cap and momentum stocks gave up all of their gains since June CPI print when it was much cooler than anticipated, right? So if we go, next thing for QQQ is the 50-day moving average and the gap. So right now we're at a very kind of make or break scenario, right? So either bulls are going to step in and say market is overbought and pushing it back, or we're going to quickly close the gap, and next level is somewhere between 460 and 450 on QQQ. So important next couple of days to see where the market is heading. Questions? Would surprise 25 points reduction next week be positive or negative for the market? I mean, first of all, almost impossible to predict, but we can talk about the scenarios, right? So if a lot of people, if you open up Bloomberg or you open up your Twitter feed or wherever you get your news and you talk to all the traders, the message is right now that Fed is already late. A lot of people think they're already late. Recession is coming, year and a half. Some of them are actually, people who were very bullish and they already turned in kind of, so I would not dismiss their concern. So if there is a 25 basis points drop in interest rates and Powell says we're dropping and we're doing this before everybody anticipates, it could be interpreted as the good news that finally Fed is following Europe and Canada and the rest of the world starts lowering interest rates, or it could be interpreted that why is the Fed in a rush? Do they see any symptoms of recession, right? So it just depends how people will interpret that. So the market could rally to 2% if they cut in July, or it can drop 2%, right? So a lot of it will just depend on how well he explains why they're cutting in July, and not in September. So I think a rate cut in July will spark volatility. It will actually spark the volatility. Same thoughts. Thank you, Bob. Yeah, I mean, it's hard to predict. Right now, let's see. Let's look at some of the trades. So I still have General Electric, right? So General Electric, let's look at GE. 175, right? So I broke the butterfly into two trades. right, was the idea that it will not break through 175. I did it a little bit sooner than, you know, I should have. But again, the idea is that when the live trading room session is over, I don't have time to watch the trade. So if you held on to the spread 170, 175, General Electric almost, you know, by magic, right, it reached that 175 level, right, multiple times. Why did it do that? What was so special about 175? Why did I choose the short strike to be 175? Because of the dealer positioning, right? So if you look at the right, if you look at GE, without, you know, not surprisingly, 175 is where there's a huge open interest, right? 175, and then 170 was the front weeks. So it did gravitate to 175, but we talked about that if the dealers, depends on if dealer long or short the gamma, it could be a repellent where it goes to 180, 185 if it's such position, or it acts as a repellent, right? And it dropped to 171. So that helps with the strike price selection. So high open interest, long, short gamma. If dealers are long, short gamma, can help you structure your trades, right? And that's why I selected 175. So I closed the 152, the bullish part of the butterfly, the spread, right? And now I'm still managing the short leg, and it's trading at 65 cents. So for now, I'm waiting, right? It's a 175, 180. As long as we don't break through this 176 level, then this would be that would be the trade. I did something similar with Tesla. So let me look at my personal account. I didn't do it in the trading. I mean, I didn't do it in the Tradespoon or Yellow Tunnel. But same thing. I did the butterfly. Let's look at the structure of the trade and where. So you had very high open interest at 300, right? And you had very high open interest. What did I select? $170. So the middle put is Tesla is 215. 215. So let's look. $215, and let's look at the estimated move analysis. So expected move was 10%, right? For expected move is 10% for Tesla, right? And we're right at the 10%, right? So estimated move analysis work. If you use my formula, 22. Let's look at Tesla. Let's look at the screenshot and see 220. So 220 is where you have a lot of put buy, not as much as call. A lot of people were obviously concentrating on calls with a bullish bias on Tesla, but their bottom line has decreased, and the stock is down exactly 10%. So this butterfly is good, and now we watch the trade. So what do I have? I have 220. No, I have Tesla put 210 put. 210, so it's 5% away. Looks like it's supporting, so it's okay. So Tesla can wait. Usually wait 15 minutes. For now, kind of the rebound is pretty weak. Bulls are not stepping in. I'm going to close the short put for now, leave the long put intact. Let's see, Google. Google is down 5%. Same thing, I have a butterfly. Estimated move, let's see, and Google was also 10%. Estimated move was 8 to 9%. Google is down 4%. 1 side, so it looks like Google is recovering. So I'm going to close this long leg. Texas. Texas instrument is flat. Tesla continues to go higher, lower. All right, so it's the same structure, butterfly. Google, I think, percent. I mean, this is more of an overreaction. It was actually up in pre-market after the announcement. So, but they missed on the revenue on pay-per-clicks. They have missed, so we'll see. But so Google, I have. Let's see. All right, so that's Google. Texas is no. Okay, so now I have to watch Tesla. So it looks like Google is recovering, and looks like Tesla is going to start. So I can close the put, the short put, 200, in case it accelerates the sell-off. So let's look at Tesla. Where's the where can Tesla find support and resist? Or, I mean, where's the gravity, right? Where's the high open interest? Now, let's look. $220 put. So, okay, so people are still short the puts. I mean, it could get to 200, right? It could get to 200 because there's really not much. I mean, there's more calls, obviously, demand, but people were not ready for bad announcement. A lot of people were short in 200. Could continue to deteriorate. So let's see. So the best thing is to close the short put. I mean, if it keeps going lower, then and actually gravitates toward that level, then then the long put will work. So let's see. It's been 15 minutes. Let's see. Tesla. Okay. So Tesla is down 10%. 220 level is important, right? If it doesn't hold 220, right? If it doesn't hold the 220, then the gap is 210, and position is only a 200-day moving average, right? So an average, and we still have Wednesday, Thursday, and Friday. General Electric continues to deteriorate. The spread, the credit call spread that I have is now 40 cents, 30 cents. So at this point, the trade is profitable. And let's see what else. What else? And Google is down 3%. Nvidia is breaking down, right? Not breaking down, but sitting at this important support level, right? And SMH, I think, is already, despite better than expected Texas Instrument earnings that were up 5%. Texas Instrument after the market, after the initial reaction, but now they're retesting Friday's low, right? So Friday's low is this kind of the line in the sand. I would say if we decisively break through the Friday's low, then at least short term to medium term, the trend is reversing, right? It's getting more negative. This is not just a consolidation. Long term we're still in bullish momentum, but short term to medium term, we're now switching. Value stocks are performing today, right? VTV 4, so we still have this rotation into the value stocks, and semiconductors and QQQ are fighting for the 50-day moving average. Small caps are positive. KRE is flat, IWM slightly lower. It's kind of a recession trade. This is not a recession trade, but more of a rebalancing and shifting your assets, from a little bit more conservative towards dividends and value stocks, right? Because you still get a lot of dividends and value stocks, and if that is going to cut rates, well, where else can you get 4 or 5% interest on dividend stocks, right? Your value stocks. Spider's hedge is green now. I do have 2 hedges. I kind of wanted to give an example of 2. Probably if the Spiders is actually positive, I'm inclined to close it because I have QQQ. So it's a nice trade. I'm up about 50, 60 cents. So 20, 30, 20, 15, 20%. I'm inclined to close it, especially we're sitting at the 50-day moving average. Usually 40, 50-day moving average is a good support. So let's close the Spiders hedge. Okay, so out of the 4 positions, you don't want to be all long or all short, right? This is going back to game theory, right? You don't want to be right. Game theory is a very important concept in trading. Right, every trader understands what a game theory is, right? In the nutshell, right, this is a mathematical static of strategic behavior applied to anywhere where there is participants, right? Doesn't matter, it doesn't have to be trading, it could be studied, especially in warfare. Executives study this at extent. But the gist of basically, you can always, you can be bullish or you can be bearish, right? But the idea, you don't want to be always on volatility or always be short volatility. It depends on what other people think and the environment, right? So that's very important for portfolio construction as well. So spiders, I'm out on the hedge. And same thing, I don't know if the 50-day moving average will hold, right? I was able to collect 60 cents, so 15%. Okay, I do have QQQ put spread, right? That's so I wouldn't close all your hedges, but since I do have QQQ hedge, I'm inclined to wait, because obviously two things are going to happen, right? QQQ either going to hold 7 out of 10 times, 50-day moving average is a good support. Sometimes in April we overshot that, right? Significantly, but more often than not, the 50-day moving average holds. Has been a good support. So we'll see. My thought process is the following: if we don't hold, right? If today we're below 50-day moving average, tomorrow we're below 50-day moving averages. If SMH drops below this key support level, Friday's low, then you can go back and add to QQQ put spread, buy spiders put spread, because spiders is also sitting at the key. So that's usually my thought process. Well, I don't really know what's going to happen, but if the spiders at 547 and tomorrow they're at 547, next level is 540, 530. So then, okay, then I can add to my hedge, right? Then I can add to my hedge. PMI 49 services. Well, PMI 49 is manufacturing PMI. What about services PMI? Then we were supposed to be both. Thank you for letting me know. Let's see. Yeah, we're supposed to have both services and manufacturing, but let's see how the market is reacting. Well, so far it's reacting negatively, right? So again, fear of recession, because if the services are contracting, manufacturing contracting, right? New construction is down, mortgages are down. So you can see, well, yield is not stable, it's not overreacting, but very weak rebound, right? So yield is not reacting, but still trading in range. You definitely see kind of a vertical move in the Japanese yen. So if you're a currency trader, this downtrend I think is broken. This intervention, trillions of dollars, not of yen, that the Japanese government is investing, looks like the Japanese yen trade is on, right? And it's a sharp reversal, which is bullish for the market. It could cause instability, right, because of the currency trade. If it's very sharp and continues to be a very large move, and people have to move institutions have to move their currency carry trade position, right, unwind them because people were shorting FXI, that could cause also instability in the market. So a lot of people are watching the Japanese yen. It's it's moving a little, it's rebounding very strongly. High yield is stable. That's positive, right? High yield is stable, so there's no panic in the market. Usually, when there is a panic, it gets translated into VIX and into high yield. And VIX is, it's not 12, but it's not 20, right? It's kind of in the middle. People are on the edge. Yeah, so it looks like spiders are falling pretty fast, right? So next level is probably close to, the next stop is 545. Some positioning at 545, more likely 540, right, on spiders. Yeah, today, tomorrow, and this is short puts, right? So the problem is, at least next couple days in July, there are a lot of people that are short these puts, right? So, and that could be gravitational force, right? People were selling puts, they thought Tesla and Google is gonna outperform, and see Tesla is dropping to 17, so it's good. My 220 put is gonna keep growing. Okay. All right. So again, this is the power of these butterflies, right? So sometimes you want to be short volatility, sometimes long. When company misses the earnings and VIX expanding, then you want to be long volatility, right? You can be, and then it just depends butterfly profit loss. Right, so the middle strike where there was a high open interest, this is what you want to kind of gravitate toward if you think there's a directional move, right? I don't know which way the directional move. I kind of figured it's going to be either one way or the other. So butterflies is the cheapest way to kind of be long volatility, right? You can do condors, like put condors or call condors. A little bit more expensive. You know, your return on capital will decrease, but your probability of success will increase. So butterfly versus condor, you just look at the, you know, probability of success. But Tesla, yeah, I mean, there's not unfortunate, but the reality is that pretty large put position at 200 level. 200 level. So I would not be surprised to see Tesla at 200 level. Questions. PMI, Bank of Canada rates down another 25. So Bank of Canada, I assume, dropped another 25 basis points. Why dollar is down if spiders is down? I think main reason the dollar is down goes up when the market goes down. But there's a vertical movement of currency in FXI, right? That pushes the dollar down. Euro is down, right? Euro is proxy for risk taking. So when the market is down, euro is down, right? So euro is down, but you know, DXY consists of basket of currencies, and one of them is Japanese yen, one of the bigger one, right? So I think you have that neutral effect in the dollar because of the vertical move in yen, which could also cause instability. So I would watch VIX and high yield, right? For now, doesn't look like there's distress in VIX, and more importantly, in some kind of the currency or some kind of liquidity issues. Usually, it gets spilled over in junk bonds. For now, junk bonds are doing okay. Bad news best. Thank you, Ted. Thank you, Bob. What is the near-term floor and ceiling for Microsoft? I mean, Microsoft is tied to QQQ, right? So if QQQ and spiders are not holding 50-day moving average, right, then Microsoft is probably going to react as well. It does have earnings, I think, next week, right? So in 6 days on Tuesday, Microsoft will announce earnings. Similar picture, right? It's sitting at the 50-day moving average. The breakout of May high is around 433 level. So I would watch, this is your main support, right? 533. Right? If we don't hold this level, right? If we don't hold this level, well, you know, depending on the earnings, we could go to 400, right? So that's positioning. So that's your technical chart. In terms of what people are thinking, what the option traders are thinking, what the dealers are holding. Microsoft, so support for this week and next week, you do have, people are pretty well hedged. That was between weekly and, I mean, somebody's selling aggressively the 360 put, but at least to this week, 430 is pretty well positioned, right? Much higher position is around 405. But you have some position at 430. So obviously, if you look at the earnings, right, you have to look at the earnings. And based on the demand of options data, right, that expires next week, right, you have 40 implied volatility. Estimated move is about 6%. So 6% of $400 stock is about $25, right? So it could be up to 465, right? It could either retest the highs after the earnings, Or if it's similar to Tesla, right, they had just CrowdStrike affected predominantly Microsoft servers, right? Even Tradespoon and Yellow Tunnel were affected. So if you have a data center and you're using Azure, you were affected, right? So who knows how much money that, I mean, obviously it's very hard to just drop Microsoft and switch to AWS, but some companies might, right? Some larger companies might. So we just don't know. So if it's very negative news, I think, and 430 doesn't hold, there's some support at 430, then you could have that $25 move, which would take it to about 2 standard deviations, so 410, right? So about 410, 415 level. So the main support is at 433. I would watch that level, 433, 430, and then overhead resistance is at 450. Short term. Jeff, thank you. Any other questions? It's 9:02. Keith, anything to add on your side? Earnings? I know I've been talking a lot, but anything on earnings, key support level, manufacturing data? Okay. Thank you. All right. Texas Instrument is up 1%. Tesla is, let's see, this is Tesla catching a bid. Is Tesla catching a bid? That is the, it's catching a little bit. Okay. Let's look at other positions and see if we want to make any adjustments. Okay. Let's look at FCX. Okay. Okay, mostly up on heat map. Yeah, healthcare, energy is up. AT&T is up on earnings. Thank you for mentioning. So AT&T reversed losses after Verizon earnings. Kind of not going anywhere, just kind of closing the gap. But positive reaction AT&T. Thank you. Energy. I mean, I'm not sure about energy. I'm not sure about energy. I mean, crude oil pulled back significantly, right? It's below 200, below 50-day moving average. NVIDIA sitting at the key support, and Bitcoin is rebounded sharply from the 200-day moving average. XLE also pulled back, right? So it's not a good, it's not a positive, this is pretty bearish price pattern. The same thing with XLP. So I think oil, energy, especially on the fear of recession, is kind of that trade is on hold. It's pulling back. The 2-year yield dropped sharply. So notice the 2-year yield is now below the 30-year yield, right? That's what everybody was waiting. When is it finally, we're going to have yield steepening of the yield curve, right? We want yield curve to look like this as opposed to this, right? So this is good for the market, and this is bad. So finally, today, 2-year yield and 30-year yield drops significantly. You have yield. That is the bullish sign, unless fear of recession. Since for now there is no signs of recession, I think this is a welcome sign where the 2-year is going to drop below 30-year yield. And I think it happened the first time in the past 2 years. So sharp pullback in 2-year with anticipation that Fed will cut rates. Right? This is not done just because people expect Fed to cut rates, and that's why 2-year yield can start making new lows, almost close to March lows. Yeah, in terms of other positions, let's see Discord, guys. Where's our Discord team? They're kind of disappeared. Other positions, let's review them. FXI, so still long FXI. I mean, it's holding this support, but I'm watching it carefully because next level is 25. So still long FXI stock. But I think continues to deteriorate. So I think at least, yeah, continues to pull back. So you can close it for 30 cents now. Let me see. Yeah, it's trading about 20 cents. It's actually getting close to my fill price for General Electric. So that was a good trade, right? Kind of almost 50% return. Google is in trouble. The good news is September, so I have time. But the bad news is below 50-day moving average, below this breakout line. It's oversold. At least it's recovering somewhat. But, the good news is I have time till September, right? And I do have a hedge in spiders and QQQ. I closed spiders, but I still have QQQ hedge. So for now, I think it's simple. Usually, if I'm down more than 50%, I wait till this debit spread goes to 0, right? I have a debit spread on Google. I can wait till the 180 call goes to 0, or I can exit if the option is down 50%. Well, you just need to be consistent. The usual rule, most option traders follow the rule 50%. So if the spread drops below 160, right now it's about 180, then I would exit the trade. So for now, it is fighting for this breakout level, right? This is the reaction to the last earnings. So we'll see. Still long Google. IWM, let's look at IWM. It's outperforming today. It's close to multi-year highs. Continue to outperform. The breakout is confirmed for now. Long IWM. JP Morgan today pulled back despite the steepening of the yield curve. But the breakout is still supported right above 205. So it's a stock. I think with yield steepening, you want to be long banks or even some of the regional banks, right? If you look at the yellow tunnel, aggressive power trader today, in terms of signals, almost every day the signals are regional banks, whether it's MTB, today was PNC, but these are the stocks that are outperforming the market. There's anticipation that interest rates will be lower, that the Trump will be president and be more protectionist, and the regional banks and US-based companies, small cap, mid cap companies that don't have foreign revenue, these are the stocks that will benefit. So for now, the trade isn't still intact. I did get back into LA Lilly. I think this is more of a reaction to the Apex. We do have earnings. I think the earnings, this is kind of more of a long-term play. But it could be ABC pattern, right? That could be wrong, right? Because if it does this and breaks, you could have a large pullback. So obviously Friday low is important. So I would watch that level. Because if it doesn't, then it could be quickly $800 stock. 800 is pretty well positioned. So if you're not down more than $250 at 800, I think this is a strong buy, right? Because this is, I mean, unless, you know, they have a lot of competitors and that theme of weight loss drugs, you know, kind of disappears. I don't think that's the case. I think they have one of the leading drugs. And for now, I'm staying long. QQQ, so still have a put spread in QQQ. I close the spiders. I think at this point, this looks pretty bearish. So the top is set. So I'm personally short term, I would be a seller into 500 for 90 level. It's oversold, so maybe it's too early to be overly aggressive on hedging, but we'll see. I'll look at the spiders. Spiders continue to deteriorate, right? So it looks like we'll see where we're going to close, but next level is 540. Next level is 540 on spiders. Any questions so far? Give me 1 second. All right. Any questions? All right. And finally, silver. Right. So silver is also interest rate sensitive stock. For now, it looks like it's finding the bottom around 26.71. It's actually bouncing back. GDX is going higher, so this is all good signs. Let's look at the silver if we want to add. So maybe add to silver. Looks like it's found the bottom. I'm personally long. I continue to buy. So buy silver 26. GDX also already started early, so I just got into, I added to silver. I've been adding to the silver position. I also bought it at 28.28. So let me see, 28.28. So I'm gonna try to capture a move, maybe a $1 move, a bit less, maybe 5% would be what? 4% would be $1 move. So 3% move, maybe 3% move, that would be 70 cents, so 27.40. Let's try to capture 27.40. Okay. Any questions? Market lately, Bob. Well, if it's a recession, then people gravitate towards silver and gold, right? I mean, silver is also industrial material, so it could have qualities of both. But gold is definitely, in gold miners, the idea that if it's a recession or inflation, then you hide in gold and silver. And that's the trade for today. Scott tonight. Yes, Scott will be here tonight. I will be here tomorrow morning, and I don't know if Keith is going to do closing tomorrow or not. We'll see. All right. Thank you very much, guys. You've been awesome. I appreciate your time, commitment, and the fact that you guys are here. Scott will do the closing bell, and I'll see you tomorrow morning. Thank you.